Okay, good morning, traders. Today is Tuesday, August 30th. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Doug, Dan, Eileen, Francis, Graham, Horace, Jacob. This is as many as I'll get through today. Good to be with you guys this morning. So, there is some movement, although it seems like markets are sort of in this holding pattern. Obviously, everyone waiting to hear Janet Yellen's remarks as we head into Friday's session. And she's scheduled to speak, obviously, before or at Jackson Hole, which, again, typically is not the place to release new monetary policy, although everyone will continue to use the QE precedent, where obviously Bernanke presented QE. So there's going to be a lot of focus on that. As it stands right now, quick look at the Credit Suisse overnight, or excuse me, the world interest rate probabilities. Looks like this. So here's the dollar. We'll go over this in a moment, but expectations for interest rate hikes moving forward from the Fed are still well rooted in December. Okay, 54.9%. The November read, which is what everyone continues also to hearken, is only at 34.2%. Remember, we ran a study, and in fact, the Fed has not tended to move on rates unless expectations are above 60%. And that's just a tendency that we've seen. So, in fact, the Fed has not hiked rates, or every time they've hiked rates, let's say this, the markets, essentially, Fed fund futures are factoring in 60% or more. So a lot of people use that as the benchmark, irrespective. Our purpose is here. We just want to see shifts here. If Jackson Hole comes out and you start to see that 54% jump up to November, or even November climb above 50%, look for the dollar to get some lift off that. Now, as it stands, and as we said yesterday, tendencies or seasonals for the dollar are actually not that bearish for the next couple of weeks, so I wouldn't be too surprised to see some more sideways action. Heading to the U.S. session, you can see that the dollar is weaker against all its major counterparts today. Biggest performer is the Kiwi dollar, up 0.81%. This thing blasted through that key resistance at 73, guys. I don't want to touch it. We'll go over this in a moment, but it could fail up here again, which it's done 5 or 6 times before. For me, from my standpoint, not really looking to do anything with the Kiwi, although we'll review it. Aussie, I'm stalking a short position. I closed out the rest of that long from Sunday that we've been talking about, and I'm stalking for a short position. I was very close to pulling the trigger right before the webinar here, but here we are again attacking the high. So we'll continue to monitor that, maybe take a position here today. Biggest loser, obviously the Euro and the Swiss block, not really much movement so far. It's been off our radar for a couple of days. But if you have any questions, we'll go over that as well. Heading to the U.S. session, as far as economic data is concerned, you don't really have much. Okay, new home sales do come out at 10. Richmond Fed Manufacturing Index comes out at the same time. Not major market movers by any means. More economic data and more significant data will be on tap tomorrow with cap good orders. Cap good orders on Thursday. Tomorrow with the existing home sales, and then on Thursday with the durable goods and non-cap good orders. Those will be the bigger prints for the week. We do get GDP revisions. No revision is expected except for a slight 0.1 downtick on an already downbeat 1.2%. So that is on tap on Friday alongside Yellen. So most of the volatility, as you can imagine, is still likely on tap for the dollar. Okay, let's jump right into the good stuff. Horace says, good morning. Great to see you, sir. Ruth said, is that info available on your site? Ruth, this is the Bloomberg terminal. When this is important, you'll see that it is on the reports. You can always go, by the way, type in WIRP into our search box, guys, and that's going to bring up the latest, latest interest rate probabilities. Let's see. That's for Aussie, UK. Here we go. Here's where they were. You can see the huge shift that we've seen, guys. So now that we've brought this all the way up to the 50% is right here at December. You could see back on the 7th of last month how markets were really pricing out any expectation for a hike at all, even to the end of next year. But the dollar's moved off. and everyone's talking about, oh, markets are following price or expectations for higher rates. This is saying something completely different, right? But Eileen, to answer, or Ruth, to answer your question, you can always take a freeze frame by clicking on that camera button, the top right-hand corner of your screen, at any point if you want to keep this for future reference. As far as the Fed Fund futures, this is going to change on a day-to-day basis, Ruth, on an hour-to-hour basis. So it's nothing that I want to really encourage you guys to sit there and kind of focus on. There is a website, if I'm not mistaken, I'll find it for you, that gives you, see if I can find that for you, Ruth. There's a website on the Chicago Board of Exchange. If you look there, I think Citi has one too, that tells you interest rate expectations. But my point being is don't focus too much on that. This is going to shift very, very often. We only bring it up when there's significant shifts or we're coming into an economic announcement or something like that, okay? I mean, the terminal's $2,000 a month. You don't want to, for the retail trader, it's really a waste. Okay, so let's jump into price action. Dollar index looks like this ahead of the open of U.S. trade. Where we turned from, absolute beauty. Okay, you had the monthly open. You had basic trendline resistance off the monthly high, the monthly opening range high that we set on the 9th there, and a real nice, strong reversal, conviction reversal off that range. Keep in mind, we also failed to close above the 200-day moving average. Keeps the focus weighted to the downside, but stop traffic. You still got a major key support right here at 11,850, 11,853. You got the 618 retracement off the low, a 618 extension off the high, and that's the level to beat, okay, to get the next run lower. Really a critical area of support. You saw a really strong rebound here in an outside day reversal last week on that Friday close. So certainly it's an exceptionally important region of support that we need to get through. Horace, thank you for that. My man, CME, there it is. Nice. So I'll send it to everyone here in the room. That's the CME's website, guys. It's free. You can check that out at any point to see what interest rate probabilities for Fed Fund futures are looking at moving forward, specifically into U.S. economic data. A good thing just to take a glance at. Thanks for that, Horace. I'm going to save that site for myself, actually. Okay. So for the near term, so we know where the major key support is on the daily basis. If we break below this, just to keep things in perspective, the next level down is basic parallel resistance turns support. That converges on the 2016 low day close down here at 11,783. So there is the propensity to see a little bit more of a dramatic drop here if we break this key support. Just want to see where the 786 comes in, even lower. And if we bring it to a 6.4, right on. Okay, so a significant level of support here if we do break 11,850. Bearish invalidation, by the way, hasn't changed. It's still at that same level that we talked about. So as long as we're below the monthly open, which comes in exactly at 11,936, you want to continue to look lower here in the index. With seasonality tendencies turning up the next 2 weeks, again, don't be surprised to see some sideways action. But the broader focus is lower below the monthly open. We'll take a look at this index again heading into Friday. So on Thursday, remember guys, there's no webinar tomorrow. I'll be out, but we'll be back on board on Thursday. Don't forget, tomorrow is Jamie's midweek strategy webinar at 1 p.m. Eastern. But we'll take a look at this again on Thursday heading into Jackson Hole. Again, the propensity for the dollar to see a lot of volatility on Yellen is there. We'll review these key levels. We'll maintain this still key range here between 11,860 and 11,936. From the near term, I'm watching this down descending channel formation, which continues to hold pretty well. Okay, so even if you get a dribble below this, don't forget channel support's just lower. And on a near-term approach, initial targets here at 11,818 would be a nice 100% off that high. Bearish invalidation, initial support target. Any questions on the dollar index? Okay, so let us jump into yesterday's update. We talked about sterling Kiwi, we talked about Aussie, dollar CAD, and sterling CAD, both interesting pairs. The sterling CAD's a new one I just thought I'd bring up, but let's just start from the top. Let's go over the British pound first, and then we'll jump into the sterling crosses. So this specific setup wasn't highlighted, although we've had it on the radar for the last couple of days on the intraday charts. Here's the last time that we talked about sterling dollar. Was on Thursday or Wednesday of last week. There we go. And here's what sterling dollar was doing, okay? We were just coming off of this major key support that we broke through. We opened the week just below it. Once we popped through, checked it as support, we turned our bias higher, okay? Topside barriers or topside targets were really targeting just the upper median line parallel at first. We've now broken that upper median line parallel, tested it as support, started the week off. It's the opening range low for the week, and we're moving up. Okay, so bottom line, focus remains higher above 130.24. That level hasn't changed. Topside resistance of significance is right here. Not only because it's just a 618 retracement, that's just the basics, but you also have the monthly open just lower at 1324. So 1324, 1325, major area of sort of barrier resistance that you need to get through. I think if you rally into that region, you're at risk, for a near-term pullback. In such a scenario, if we do turn up there, I'd be tacking on a quick retracement. This retracement, by the way, is null and void. You're going to want to take that to the high now. And again, I hate doing this because I don't know that this is going to be a concerted high, right? So usually I will keep these retracements in gray until we get some sort of inflection off it. But it continues to highlight that same region at the weekly opening range lows. Are you finding the 2-hour time frames more helpful than the 30-minute these days? Eileen, I know you're probably asking that just because I've been presenting more of those on the reports. For me, guys, I present it in the cleanest way it is for you to see it, if that makes any sense. I try not to go too granular on the 30-minute if the structure is not very visible. You know, my concern, guys, is that you look at the 30-minute chart and there's so many lines and so much going on, you kind of get intimidated. So I've been zooming out a little bit just to give you guys a little bit more sense of reference where we are in trend. But the strategy hasn't changed, okay? So we're still looking at very near-term price action where we're looking to execute the trades, Eileen. It's just there to give you guys a little bit more of a sense of trend. It says, okay, makes sense. Right on. So, as far as we stay above 30.30, 30.25, I like the long side here for sterling. I do think, like I said, near term, you're at risk for a little bit of a pullback below 32.50. Also looking at momentum, getting a little tired here on these last upside stretches, but really solid support at 40 since the start of the week. So use, possibility for an upside move here near term. Wouldn't be looking to chase the long if you're not already holding a long. I'd be more so looking for a pullback, more. If you can get it at the weekly open, that would be ideal. But like I said, if we peak out here and break the lows from London, tack on a quick retracement, and just see where those initial retracements would come in. Okay, so your basic 236 would take you basically into 3130, and a 38.2 takes you into 3080. I think personally, the pullbacks are going to be pretty shallow. They've tended to do so on sterling breakouts, so we'll be mindful of near-term momentum. So, not my favorite play. Are you thinking it may now retrace to the 130.56 before going to 132? Ruth, I wouldn't play it like that. Unless we see a turn in momentum. Do you know what I mean? I'd rather be buying a pullback than trying to play the pullback at this point, because this is a concrete break of resistance, check it as support, and move off. So for me, that kind of shifts the focus higher. I'd need to see something a little bit more significant to take a trade against that near-term bias. Ruth, does that make sense? Where did you take that near-term fib? The fib is from this low, just to the high that we just made. Again, don't put any validity on this fib yet, Eileen, but that's just there for your reference. Ruth says yes. So I just wanted to show you this, guys. The low from last week, yeah. I just wanted to show you this, guys, because although this is not my favorite sterling setup, I'm not really a big fan of playing pound dollar. It gives us some insight on what we should be looking for towards pound Kiwi, pound CAD, pound yen still looks good, although it's getting just a little boring here. But longer story short, still liking the upside. The immediate upside looks a little vulnerable here below 32.50. You look for a pullback to get long. Here's what pound Kiwi looks like, or here's what we looked like last night. And here's what we look like now. Pound key. Okay. So the only thing I wanted to kind of highlight this is the same setup that was presented on Sunday night, but the only thing that really stood out to me yesterday was this clear-cut support hold at the lower parallel. And that's something that's very encouraging. So while this thing is essentially still holding the weekly opening range just above parallel support, you do have basic trendline resistance extending off the high that you need to get through to really validate sort of a breakout type of play. With that being said, this is a good sign. This is a good sign. Momentum starting to hold 40 on the 30-minute. This is a good sign. Okay, this is a good sign. So we're basically looking for a possible breakout of this longer-term trend. Now, the problem that you're seeing here today is that the Kiwi's just ripping face. So despite pound strength that we're seeing, you're not really able to get much play on the upside here for pound key. Sit tight. I think this will offer us a nice play. You could have had a couple of decent scalps real near term, but for me, I haven't really touched this yet. I'll be looking for the U.S. trade session to either give us another low into this where I can put a stop against that low, or if we break higher, guys, look for the pullback to try to get along against the U.S. session opening range low. And that's the way I would play this, but it continues to hold this formation. If you guys remember, we added this at the start of last week really tentatively because we didn't know if it was the proper slope. Well, since then, you've seen real nice concrete resistance, nice pivots along the median line, and there's a lower parallel catching yesterday's low. Okay, keep in mind the daily chart as well. Coming off the 2013 low. Very basic. Right? Real concrete. You got basic trendline resistance off of just last month's high, but also trendline resistance off of the May highs. Right? Basically converging on the highs that we're making, or the highs we need to get through from the week. Any questions on pound key? I don't blame you if you want to keep the powder dry on this one for a little bit longer. Again, I've kind of been searching for some inputs here as far as entries, but I haven't really gotten any thus far. Ideally, you get a drop into the parallel support. If not, sit tight and we'll see if this thing can make its way through the highs here. So that is pound key. I guess we might as well just stick with the sterling crosses. Here is pound CAD from last night. That ML continues to hold, and this is something I just wanted to bring up as well because of how tight it's continued to hold this near-term formation off of last week's low. Really nice median line play. Well, again, as I said yesterday, might be a little bit too early to rely heavily on it, but you saw that the upper parallels basically capped yesterday's advance, and the upper median line parallel converges on that 50% retracement of the decline off the highs from the month. That's at 70.76, and it coincides later today. So I do think near term, you look for this to stretch a little higher. Kind of fits in, right, with what we just talked about in the pound. Maybe stretching a little higher, getting a little bit of a pullback, exhaustion, and you look to find some support and reestablish the long side on a pullback. But as far as pound CAD is concerned, this has got some serious upside potential, in my humble opinion. We've been talking about this, if you guys remembered, last month or earlier in the month on this initial breakdown. That's that same slope that we just added. Or excuse me, this is a wider slope from last month's low and this month's low. Way too early, but look at the levels it highlights. Okay, right here, lower parallels, the same long-standing trendline support. Coincides dead on with last month's low day close. The median line comes right in line with the monthly open, which comes right in line with this basic slope that we've continued to follow off the highs. Nice pivot along this one, and support catching the lows. So I do love this. And then not only that, but on the low, look at that strong divergence. This is the kind of divergence I would want to operate on. because price action is making a concerted low. It's not some wick action where you need to go to the daily line chart to see if it's lower. It's visibly lower. And then you have one of the reference points sub 30 and the other one above. That's pretty strong as far as divergence is concerned. So the daily chart is showing you waning momentum. You're at longer term support. I do think this thing gives us a little bit more of a rebound. So initial resistance, I just look for that initial low that we made for the month, basically where we capped out so far, 70.40. But ultimately looking for a rally towards that 72.50 mark, the monthly open. Again, here's what the 30-minute looks like. So near term on that 70-76 stretch, you might get some exhaustion off that. If we do tack on a quick retracement, we'll look at this again later in the week to see where we can find the pullback. But we'd be looking to ultimately buy that pullback. We're going to keep bullish invalidation still down here at 68.80, last week's high, and the lower parallel. On a topside breach, if we do make it through 70.76, you got 71.42 is just a soft target. I'd really be looking for the 618 and the monthly open. And again, that gives you 71.87, essentially into 72.35 or so. How far do you think we wait for the long entries for the sterling CAD, Eileen's asking? You know what? If we get, it depends how it works out, Eileen. If we get the spike here, I think the pullback materializes for a little bit more of a duration. Let's do a quick drill. And again, this is not something you guys should do in practice, but just to put things in perspective. Let's say it does spike into that region. Look where a 38.2 would come in. Right along the same exact region we're looking at now. So any way you slice it, I kind of want to see this thing stretch into a little bit more of a high near term. And then we can look to see if we can get a play on the pullback. You're getting divergence into the highs here on the 30-minute. Price action making a higher high. The oscillator making a lower high. Again, showing some waning momentum. So it's kind of my thought process here for sterling CAD. Again, a little bit wider of a range ATR, so keep that in mind if you're newer to the strategy. And let me just check out one thing here. Let's do this. Instead of using the 50 line, there's actually, if you just take a same slope and extend it off that high there, you could see some really nice pivots. So I'll work with that for now. So a couple of ways. Let's just put this on the table. A couple of ways we can play this if we're heading into the U.S. session. On a spike into this region, if you see momentum exhaustion, I actually would be looking to possibly take a fade on that position. Half leverage, right, because you're counter trend trading, and the initial target would only be the median line. On a breakdown further beyond that, then we'd start to look for possible re-entries here along the lower median line parallel. Any questions on pound CAD? Watch oil prices today as well. We're down on oil for the second consecutive day after coming off resistance. I'll show you that chart in just a moment. First, let's jump into dollar CAD. If there are no other questions here on sterling CAD. Here's what dollar CAD looks like. You mentioned you did not like trading the sterling dollar, which are your favorite combinations to trade, generally since it's difficult to follow too many. Ruth, you're absolutely right. You don't want to try to follow too many. That's my job. Let me present to you guys where the opportunities are. Ruth, I don't want to really fall in love with a specific currency pair. When people, I get that question all the time, what's your favorite pairs to trade? And I can't really say there's a favorite pair to trade. It's based on the setup. It's based on price action. If there's a beautiful setup in, seashells versus salt, if there's such a trade, I'll take it, right? It's all about what price action's doing. That said, Ruth, for our purposes in scalping, typically you want to go with the majors because the spread's going to be the tightest. So, when you're looking for a 200, 300, 400 pip move, having a spread of, half a pip versus 4 pips doesn't really make a difference. But when you're looking for 20 or 30 pips, kind of does, right? Especially when you're in and out. So I tend to stick with the majors, A. B, I could just tell you over the course of my career, over the last 10, 11 years, probably most of my trades or the largest portion of my trades have been in Aussie and the Aussie crosses. Back during the financial crisis, it was very risk sensitive. You can get a lot of play off the Aussie. Aussie yen was like insane. So again, it depends really on what's happening in the underlying markets, Ruth. But to get started, probably better off with the majors. It's a tighter ATR as far as the range that you'll see on a daily basis, and also the spreads tend to be a little bit tighter as well. So you're quicker in the profit as soon as you jump into the position. Ruth says, okay, cool. Feel free to ask any other questions, Ruth, that you have on that subject. Dollar CAD. Here's what dollar CAD looks like. So, as we talked about yesterday, this thing did come into that resistance and it did hold. We'll come back to Aussie in just a moment. Again, I'm still stalking a short on that as we speak, but here's what dollar CAD looked like last night. And I kind of just wanted to highlight the region of resistance that we were coming into. The 50 line for this newly added structure. Again, this was a very tentative structure that we added last week, and we weren't really sure if we were going to get too much play on it. But after that first initial tag we got earlier this month, and then the low that we made last week coming right into the parallel, added further conviction. Now on the rebound, here's the 50 line and former trendline support. And that's where you find some resistance here today. So my sort of point of putting that on yesterday's report was, look, I do think you can get a snapback higher here. If oil is turning over, that's CAD weakness. You'd expect to see some more upside. Seasonals for dollar are positive. You've seen a 9-day decline, but doesn't matter because you're at resistance. So this is the level to beat still heading into today, guys. You're basically looking at 29.50, 29.45. You have the 100-day moving average in there, but you know, all things held constant, it's really just the median lines that are governing this rally here with that advance. On the near-term chart, okay, I did do a slight adjustment to this. This is the slope I think Jamie's looking at as well. Gave us a little bit more better touch points here, and it also comes in just above the high we made yesterday. So near term, you're still looking at resistance right into that 29.50 zone I just noted. Near-term support is being tested now. This is the weekly open and the parallel also, basic channel support. That broke and was tested as resistance last week, broke, and is being tested as support right now. Okay, so the focus range to head into the U.S. session is basically 129.50 into the low that we just rebounded off, 128.90. Bullish invalidation is 28.60. So if we do get a drop into this region, I would be interested in long exposure. Topside break above 29.50 gets this thing going. Here are the implications for crude. And I just wanted to bring this up because we've been following this same exact chart for so long, and where we turned yesterday was like ridiculous. So if you guys remember a 786 retracement, we added that on earlier or late last week. That brought you 48.97. The high that you made yesterday was 48.97 to the pip. And you saw a mean outside day reversal off resistance. Okay, nonetheless off structural resistance. You didn't get an actual tag of the median line, but you're pretty close there. So long story short, that's still your level of key resistance here on crude. I would expect to see possibly a nice little pop higher before you move lower, but in general, that's your bearish invalidation level. You're looking lower from here in crude. Again, if you're not already short, I wouldn't do anything. I would look for a little bit of a recovery here, possibly a fake out to wash out those last hands before moving lower. And the other one thing I just want to notice is if this is a 1, 2, 3, wave 3 being the extended wave, you might want to make one more high before this thing turns over. So that's why this is very tentative for me, and that's why I'm leaving that highlighted region of resistance up there, because I do still think it can kind of complete a 5 wave before moving lower. That being said, you're coming to some major resistance here for crude. And let's readjust some of these levels, shall we? Just want to see what this looks like. All right, this is what I would say near term. Watch that range there of support. You get the 100-day moving average in there, a basic 38.2 off the low, and then the May open, which has continued to be a major pivot in price for the last couple of months, kind of highlights this key region. You're basically looking at 45.22 into 45.98 as near-term support here, or initial support, let's call it, for crude. Any questions on crude or dollar CAD? Or any of the CAD crosses? One other thing we do want to just touch on is Aussie CAD. Monthly open resistance being tested right now. Here's Aussie making another run towards the highs. Hopefully we'll get an entry here soon, guys. Here's Aussie CAD on the daily chart, guys. If you guys remember this from the previous session's update. Okay, here's the near-term chart looks like, and I just want to show you this in a moment, but topside resistance, we were talking about this on a breach above 98.16. You're looking for the median line, then the monthly open, which comes in just south of 99. Here it is. Here's the monthly open, okay? You're testing that as resistance now. So from the daily chart, I just want to highlight, close below the median line is still required to keep this thing looking lower. From the near-term standpoint, here's what it looks like. Here's that monthly open. There's the breakout. And again, you want to fade weakness here in Aussie CAD while above 98. Okay, basically looking to fade it while above the weekly open. And if you tack on a retracement from there, I bet you the 618 comes in just lower. This region here. Might be a good area of entry for a pop higher here. Ultimately, I'd like to see this thing rally towards 99.70, former basic trendline support off the 610 low. Break of support, check it as resistance, and then that'll be the sort of tell of whether this thing actually moves higher or not. But right now, immediately, your long bias is at risk. Okay, below the monthly open, below the broader median line off of the highs. Here's what it looks like on the 2-hour. Horace says long or short. It depends what you're looking to do, Horace. From here specifically, if it rallies into this region, offers some short triggers, I'd be interested in taking a short on it. But ultimately, Horace, we're looking for a pullback to get long. Does that make sense? And guys, this is why I can't offer, trade by trade bias on this, because depending on where you are and what you're looking to do, we can play this both ways. If it stretches into the monthly open like this and gives us a nice short trigger up here in momentum, I'll take it. But it's a counter trend trade. So it'll be half leverage. I'll be looking to play it just into initial 38.2, or initial targets would be just the lows for the session, and then that 38.2. But broadly speaking, I'd rather be looking for this to pull back and initiate some new long exposure against the weekly low, looking for a pop higher. And that's on account of, and it matches up beautifully with some of our broader biases on Aussie strength, near term, for a pop higher here before it turns over. It also matches with our bias as far as seeing some CAD weakness. Again, near term, you could get some CAD strength as crude is expected to pop higher then turn. But these all should offer some nice opportunities for us to be able to get in on the trend. And guys, again, price action's likely to remain sideways for a couple more days. This Jackson Hole thing is always, it's always such a perversion of market dynamics because, whatever, I don't even want to get into it, but you guys know what we're talking about. The focus really starts to shift on everything she says and every word she does and hangs on every sort of nonsensical thing that comes out of it. But as far as price action is concerned, heading into the release, you're likely to get some lulls. Okay, sterling yen, topside break continues to materialize. It looks pretty good. We briefly covered this yesterday. If you guys remember this from earlier in the week, here's what sterling yen looked like to open up the session for the week. Bring it to an hourly chart here. And the basic premise or the focus of this trade was a break of this multi-week median line formation. Already going on 6 weeks here. So the only thing I don't like is typically on these multi-month breaks, when you see these breaks, typically it's a 1, 2, then a rocket. A lot of pent-up breakout action. You're not really getting that, although you did get a check of former resistance as support and a nice rebound, but it's still been a quite contracted range. That being said, I'm not going to let that shake us out of our bias, and you got to stay constructive above 130.82. 130.82, by the way, is the close from last week. Ruth says, what date is that speech planned for? So Ruth, that's on Friday at Jackson Hole. And you'll find it, I'm sure, all over CNBC and Bloomberg and Reuters and all that good stuff. For British pound yen, the focus remains higher above 130.82. Again, that's the close from last week and the uncovered close, mind you. So, I wouldn't be terribly surprised if this goes in to fill that gap before moving higher. That being said, the focus remains higher while above that region, looking to buy pullbacks targeting 132.75, 133.32, and a more significant Fibonacci confluence up here at 134.45, 134.50. Keep in mind that's also a 38.2 retracement and basic channel resistance. So I think it looks pretty good. And this thing tends to love channels, as you can see here, just over the last 3 months or 2 months or so. Finally to get some clarity and clean play here on pound yen. Any questions on pound yen? Don't forget the weekly open too, guys, right here. But no change to our levels or outlook from yesterday. Questions on pound yen? Okay, let's jump into the Aussie dollar, shall we? So here's what Aussie looked like last night. Here's what Aussie looks like right now. And I got a pretty decent exit on this one last night on a stretch basically into 76.45, I think is where I exited. And I'm still on the lookout for possible exposure or possible entry on the short side. Now, it's breaking above 76.51. The opening range for the U.S. will kind of be the tell. If it breaks higher beyond here, I'd be looking for a stretch into 76.71. But as it stands right now, here's what it looks like. Okay, momentum is continuing to flatten out. You're above 60 right now, but not by much conviction. Here's what the 5-minute looks like and the 1-minute that I've been following. Again, here was the entry last night. There was a couple of exits on this long. I showed you in the webinar yesterday. Here was the final exit for the rest of the trade here, right along 76.45. And I'm still looking for short entries. Now you're seeing that momentum, constructive bounce above 40, constructive bounce at 40, break above 60. Even on the 1-minute, you saw that 40 hold earlier ahead of the webinar. Here's 60. This is what I'm starting to look for. And I want to see a 40 break to the downside. You might miss the initial turn here, and it's never wise trying to call a high. But I do think this thing, risks exhaustion near term, and I'd like to get on the short side. Now, some of you probably see I was working with this pitch as well, which basically puts you at resistance right now. Whether you're using that pitch or not, I like the slope of this one just a little bit better. You're flirting with a bit of a breakout here. So just keep that in mind as you head into the U.S. session. And as it stands right now, the one thing I also want to point out is that what I'm paying attention to is heading into the U.S. Open, your U.S. opening range is taking shape just below the London session highs and just below the Tokyo session highs. That's significant. Adds further conviction. If we do break that 76.55, 76.60 zone, I think this thing will run pretty hard. Questions on Aussie dollar? Eileen says you're looking for shorts. Yeah, I'm looking for shorts. Yeah. I'm looking for a short position. It's just I don't like where price is because we're flirting with a hold above 76.50. So I'm looking for like an opening range break to kind of help me out here, or a little bit more a concerted turnover in momentum. Honestly, you could probably take a stop right or a short right here with a stop maybe 10 pips above that high, and it might pan out. I just don't have a trigger that would put me in that position right now. Make sense? Dean says, oh, I see that. Thanks, Aaron. More than welcome. But I do like a hold here because, again, Asia high, London high, the U.S. opening range high holds this into 930. Might be a decent region to trade against. Questions on Aussie dollar or any pairs that you guys want to cover? Kind of ran through them pretty early today. A quick outlook on, or a quick update rather, on what's happening in the gold markets. Trevor wants to look at Kiwi and Horace wants to look at Euro. Sure. So here's Euro is actually very interesting to me. I haven't covered it on the updates lately, guys, because I kind of just want to let it pan out for a little bit. I do like where we are in near-term structure. I don't like where we are in long-term structure. That's my problem with the Euro. I guess let's just focus on the near term for now. Euro is in the exact price area we were 1 year ago with Yellen on Friday. Wouldn't be too surprised to see similar spike as last year into the highs. Thoughts? Scott, I wouldn't be too surprised to see that easier as well, man. I mean, I have 113.96, 114 as a major area of resistance. You also have the median line for the current operative slope up there. Could be the way this pans out. I like the broader upside story for the Euro. I like the upside while above 12.25, 12.30. That hasn't changed. But trying to get a position from here, it's, I just don't have it, guys. I just don't have a setup that allows me to get a conviction trade against this. Let's see. Again, there's that 114 region. I'd be interested in possibly fading strength into there. I'd be possibly interested in fading weakness into here. Again, 1225, 1230. Outside of that, I just don't want to get chopped up. Scott, Horace, do you know what I mean? Again, I mean, if I had to, if you put a gun to my head, these are the levels I'd be looking at. But I don't put a trade out to you guys unless, I have enough conviction that I would actually operate on it. And on the Euro right now, although I love, like I said, the near-term structure, these slopes seem to be holding like no one's business. It's just, for me, I think you get a pullback before you move higher. Either that, Scott, and again, this is all conjecture, right? Either that or, Yellen comes out, this thing spikes into 114, then just tanks. In which case, either way, I'm going to get screwed. So I'm willing to sit this one out for a little bit on the Euro. Again, gun to my head, forced entry. I would say this thing moves into a low and then moves higher. Long story short, I do like the broader upside for the Euro. Does that help at all? Scott, Horace? I'm just being completely honest with you. I like it. I just don't have levels of which I would be interested in operating on per se right here. Horace says, yes, I do. Thanks, Aaron. More than welcome. Kelly says, I like your patience, grasshopper, good teaching. Cheers on that, Kelly. Yes, I should have asked you 2 days ago, Horace says. Yeah, I mean, again, I'll bring it to your attention as soon as I think this thing has a little bit more technical clarity to it, but I'm not gonna force a trade on it right now. It's just flirting with some interesting levels. I was just making an observation. No trade for me, says Scott. Yeah, and I like that observation. Those things are always interesting to know, right? After all's been said and done and all the disastrous, you know, policies and all of this and everyone who's concerned, we're right where we were 1 year ago. You're absolutely right. Such is the markets, my friend. Um, Trevor wanted to look at Kiwi. Oh, yeah, yeah. Where would I be without talking about Kiwi? Okay, so another one, and I hate now we're covering two in a row, but these are your questions. I won't touch it. I won't touch it. I won't touch it. I won't touch it. I won't touch it with a 10-foot pole. I don't know what this thing is doing. I'm being completely honest with you guys again. I think if we stretch into 73.90, I'd be interested in looking for some possible resistance. You got a pretty big resistance confluence there. 100% extension off of the July lows. This is a 764 broad retracement from the decline off the highs he made in April of last year. You also have basic trendline resistance off of the June highs and July highs. So that would be sort of the target if we break the monthly high. That being said, I got nothing. You know, this thing has tried to break um, last month's high day close and the March 2015 low day close. I know I've covered this with you guys. This is like the sixth, seventh time. 1, 2, 3, 4, 5, 6, 7, 8. This is the ninth time you tried to break it over the last 3 months. Now you can see, you know, some of these look like legit breaks, but every one closed this session well off that high. So A, I don't trust it because this is the fourth, fifth, sixth time that we tried to make this break and every single time we've closed below. B, if we do close higher, the obvious trend in my mind, the obvious near-term observation would still be to move higher towards that 73.90, 74 handle. So momentum's peaking above 60. You know, we were noting that as sort of something that's been holding since the start of the month as well. That's changing. I think it doesn't pay necessarily to try to fight this at this point. And if it does spike into this region, just as a disclaimer, I think this would be a great opportunity to take a long on sterling key. Because if you get a pullback from here in Kiwi, I think that'll be all the fuel you need to get that push higher in sterling key. So I'm giving you guys options. I'm not really trying to trade all these versus the dollar per se, especially heading into major event risk. You're likely to see this thing trick out a couple people. So that would be a pair I'd be interested in if I was looking to trade Kiwi. Ruth says, so is an option to focus on the pairs you highlight for that week and probably use the pending trades you set up? Ruth, I have made a lot of losses in trading, so I want to ensure I benefit by using the best recommended path. Sure, I want to make this absolutely 100% clear for everyone in the room. The scalping strategy I use and the swing trade strategy Jamie uses are separate, guys. So when you're talking about pending trades, Ruth, I just want to make sure we're not talking about Jamie's strategy. Jamie's strategy is to be held in and of itself as its own. These are near-term trades you can do if you're not holding swing trades or if you have a separate account. I have a separate trading account for longer-term swing trades, and I have a separate account for intraday trading strategies, right? It allows me to take near-term positions against my longer-term bias. So if I'm holding a long in euro and I think that euro's at near-term resistance, I can take a near-term position against that on my intraday account. That being said, I don't want you to mix the two, Ruth. But as far as pointing you in the right direction, absolutely, that's my job. Okay, I'm going to bring up the trades that I have in front of me that I'm currently operating on, trades that we're looking that have interesting levels, clear technical guidance on what's happening in the near term. You know, that's where I come in. So Ruth, keep asking questions. I know you're newer to the program and you're in the right place. Feel free. Michael, I'm very new here. Is there anywhere where you outline your scalping strategies? So on the resources page, Trevor, you can definitely take a look at some of the links we have there. Online, I have tons and tons of videos on YouTube for scalping and intraday trading strategies. But if there's anything specific, again, you're in the right place, Trevor. Just feel free. Okay, did not understand the pending trade was not your suggestion. So Ruth, yeah, pending trades, it's not about not being my suggestion or not. It's about the pending trades are part of the swing strategy. So if you go to long-term charts, guys, and I'm going to shoot a video just like Jamie did. By the way, if you go to the free insights portion of the website, you can see I would definitely encourage you all to go through this video. Jamie made this last week. We kind of just went through the basics on how you read the swing trades, where you can find them on the website. Here's the link so you can go through that at your leisure. Definitely something I think should help you all. But the long-term charts page and the latest swing update will always be for swing trades. So the active trades, pending trades are your orders for the upcoming trade session. These are all for swing trade setups. It's really the near-term charts, the intraday charts, where all the scalps, so near intraday trading. Does that make sense? A little walkthrough there. Trevor says, okay, great, thanks. So far, really, really happy to have found you guys. Trevor, it's great to have you on board, man. I appreciate that. Okay, Francis says, Kiwi's the house of pain. Well, right now it is. Thank God. I was looking to fade this again yesterday, and sometimes it's better to be lucky than skillful, but this thing, you know, Wheeler just knows what he's doing as far as talking this thing up and talking it down. Joel says, "Can we look at gold again?" Yeah. Oh, we didn't do it to begin with, Trevor. Here's what gold, or Joel. Here's what gold looks like, man. Look, the only reason I wanted to bring this up is to highlight that the same levels we were highlighting 3 weeks ago are still the same exact levels in play now. 1355 resistance. You got the monthly open just lower. Key resistance, bearish invalidation. Support continuing to crowd into that parallel off the low, but also the reversal day close from last week, or last month rather, excuse me, and that's at 1330. Also, the monthly opening range low at this point. So look, whether you see this as a near-term consolidation triangle formation, which is typically continuation, or whether you see this as a possibility for a little bit steeper of a correction, this is the range in focus. Until this range gives out, it's neither bullish nor bearish. It's a range, right? Markets can be in a uptrend, markets can be in a downtrend, markets can be flat. Flat is a trend. And that's what gold is right now. The broader trade is bearish and constructive above 1287. So even if you get a downside break and this thing tanks, you know, 50, 60, 70 bucks, I still think you buy it well above this key region of support here into 1287. Joel, does that make sense? Any specific questions, Joel, here on gold? I don't really follow it on an intraday trade basis per se, but this range has been of absolute, you know, it's absolutely paramount moving forward, specifically into Yellen. Remember, if rates are foreseen staying lower for longer, that's bullish gold. Okay? If rates are foreseen coming in faster than expected, that should be pretty bearish. That should be pretty bearish. Remember, gold doesn't pay a dividend, pays no yield. So if there's going to be higher rates in the United States, those who are seeking yields and a little bit more of a safer play, well, you know, I can earn interest here. But if people are expecting that the Fed will stay ultra low for longer, you know, that's always running the risk. Joe says, no, I just wanted to check your opinion. Thanks. Yeah, you're more than welcome on that, Joe. Okay, so your suggestions come mostly from these sessions or Twitter. The intraday is not always updated daily. Ruth, the intraday is always updated daily. It's not always updated on Sunday because it's really early in the week, and there's not enough price action that's developed yet for me to really get a strong opinion. But these setups and these levels are good for the next following trading day. So the 22nd, these levels are all good for today. And obviously, if there's any update during the webinars, you got that going on. So glad for SB, second and third, that says Eileen. Have a good day. Cheers. See you on Thursday. Hey, Ruth, you're more than welcome. I love the questions. Feel free to come, keep them coming. I want to make sure that you're as comfortable as possible and that you're utilizing the service as best you can. Guys, we'll go ahead and wrap that up here. Got the open of U.S. trade in just under 5 minutes. Watch the Aussie. It might get another stretch higher, but I'm looking really to see if we can teeter out and find some resistance up here heading into U.S. trade. I will be out tomorrow. Again, we'll be back on board with the intraday webinars on Thursday morning. Quick reminder, again, tomorrow at 1 p.m. Eastern, Jamie will be on with his webinar, midweek strategy webinar at 1 p.m. Eastern. Till then, best of luck trading, and I will see you on Thursday. Cheers.